Hello, it is the 19th of October 2010, and in today's video, we're going to once again look at the price action of silver with a chart where looks can be deceiving. One of the looks that can be deceiving is that the market actually lost today, or it could also be deceiving when it goes higher, because a lot of times when we see these moves, there are many different forces and particulars that can make the price movement and the technicals move the way that they do. With that being said, you seen a big move today, down like 4% in one day. Is that insane, or is that just the correction that you are looking for? If this is the case, you got it down to this trend line. As long as it stays above this line, it is still at a super bullish level. I've been saying all sell-offs are guilty until proven innocent. Well, now it's time to see if they can prove this sell-off innocent by saying, yes, we want to retrace lower, maybe down to 23, 22, 21, whatever number that is chosen. Maybe some might even say it's the top in the market. We'll only have to wait and see and look at the deceptions. The deceptions, like silver got up to 24 and a half. It was actually 24.95. That's where it got up to, because this is SLV, the silver ETF, which is only from 9:30 to 4 p.m. Eastern time. And well, with the deception, because of the American dollar gain, it did the American dollar gain strength. So therefore, in the United States, it lost 6%. Canada, Australia, from the highs that is, it's like 4% since that 24.95 high. Silver's been down 6% and about 4% in many other countries. Every country is, of course, a little bit different because of how their fiat dollar is trading within their markets. And I put this orange line, which represents the volume weighted average price since the open, the hours following the 24.95 level. And within this VWAP, since this open anyway, it was held as support, resistance. It came up to this level, but wasn't obviously able to hold with the big selling that happened earlier today, and it got below the 5-day moving average. It's still rising, but it's going to start to flatten out pending some gain that can get us above and towards the 24 level. It'll start to flatten out, and if it's not able to get above this or hold this trend line, then it's going to decline. So the battle now would be the trend line against the 5-day moving average. And this is something that has to culminate very soon in the next day or two, and if not the next day for that matter, and it's going to have to either be the retracement that we have. It actually broke below this trend line in intraday trading. It went down to 23.50. Looks could be deceiving. Right back to this high and back to this high, because in the pre-hour sessions it got up to 23.50 here on two occasions. So support is now a level where resistance was recently, and that's still a very bullish scenario. Just because you go below the 5-day moving average doesn't mean that it's going to be changing over. As far as this little weird looking line here, I'm aware of this error. In fact, this one had it, this trend line had it, this one had it, the VWAP had it. I had to fix a bunch of them. I guess I didn't get this one, but this level here is the VWAP from the lows back in August, and this isn't an issue unless we have some big selling within the markets. Now we're going to move this over now to the weekly chart. And as far as the key support level, within the high of 24.95 and the breakout level of 17.75, the price target is $22 per ounce as the big support level that it's going to need to hold. Holding 1775 on any pullback would consider itself the next support level, because when you have a gain of this nature, what you need to do is you need to say, okay, what's support based on price action? You have this big gain here, have the move, there's support. Have a big move up, where's some other ones? Say it here. You need to develop support. You have a big gain. Move here. You need support. This was a massive one. So normally we've been having the big moves after the run up. In fact, after this one here, we established support at this level here, and then it tanked on the way lower. So we need to establish a level. Doesn't mean we have to do it today, this week, next month, but at some point it needs to establish it. It can establish it through, let's say it's going up like this, and then it can establish it through price, something like that, or it could establish it through an area where it just corrects through time like this, and then you can establish, okay, this is the area of support. So we need that. So basically, what I'm saying is it needs to establish a level. So it could take a while, but we'll wait and see. Now, there's some interesting trend lines I want to go over, and I want to talk about volatility to finish this video off. And the trend line that I've been pointing out is this one here. It's not the only one. In fact, I went through a bunch of them before, and I'm only going to go over two more after this. But within this trend line, it has gotten above it. It's another area where you can come and find some support. As far as its direction and price, you're looking at about 22.90 or so right now. We'll say even up to around 23 is the area for support if it comes down even further, because you don't expect it to go above it and then just fly above it, and if it does, then it's going to have to correct later on. I do expect big moves to happen, but we've already had this big run up. A market time correction could very easily be expected to come, but once again, I'm expecting big moves to happen. We're late in 2011, 2010. I was going to say 2011, which means that the reason for these big moves with the fundamentals are already here right now. And if you're looking to sell on these dips, this is the time to sell at the SLV shares, the SLV calls, the COMEX holdings. If you're playing stocks like SLW, this would be the time to profit take that manner. And if you're looking to sell just a little on the side within the physical, well, if you could successfully do it with the physical, congratulations. However, it's very hard to expect to make a lot of profit on the small pullbacks on the bullion, unless, of course, you are able to buy and sell at around the same prices very easily. And I mean same prices as they are per ounce. Now, as far as some final trend lines and some volatility, we are currently within this range in here, and we're now at the top part of this range. It's a range that connects these highs and these lows. And we haven't been up to okay, this is two stories on this. We haven't been up to this area in quite some time, in about a year. That's a sign saying, you know what, it's time to retrace, because you've had a big run higher and you haven't been here in a Coon's age, but at the same time, this is now from the original hit. This would be the fourth hit or the third time this level is hit for resistance. So the more often it is hit, the more often it can be taken down. And this trend line here, when you see this trend line here, you think silver's up too much. Really? You think it's up too much? This is a trend line that would be the next level we would go to on trend line analysis within a break of this trend line. So therefore, just because we're up too much, if we do happen to have the move, and I really have to emphasize the word if we do have the move, we're most likely going up to this level in here. And Fibonacci says the next major level is 32, and that would be pretty close. And if you really think that is up too much, we also have this trend line that we're going to have to do something about. We'll say this right around here, but we'll give it some time before we really do much about that trend line. Now, as far as volatility is concerned, I have a chart on the top of the screen, and the way this is calculated is it takes the gap on each candle from the lowest level to the highest level. Therefore, if you have a bottom at 20 and a top at 25 as your low high on the open low high close data, then you would take the difference of 5 from 20, and then that would be 40%, 20%. And that's where these calculations are coming from. And I was recently stating about the high volatility within the markets and to watch out for it. Well, we've seen it happen today on the intraday level, which was stating we were having more volatility. As far as this chart is concerned, we haven't even scratched the surfaces yet for having huge volatility. But here's the kicker. The kicker is this data does not include anything from this week. And a break above 10% from high to low will be above this trend line. When we have this go really high, look at what happens at each time. When this goes really high, we had the selling. Look how they match every single time. Now that doesn't mean that you can't have big moves towards the upside. I don't have the chart in front of me now, but if you go back to 1979, you would see that a lot of these big moves were to the upside. So if you're a silver trader that would not mind to have another great buying opportunity, you are hoping for a move up to here. Most likely it would be a move lower, but you're looking to buy more. And the move you're hoping for is towards that 22 and maybe even 20 level for an area where you could end up getting another purchase. And if you already have silver, a lot of it, you break this trend line up to here. Now you have a move up to 32 where you're not buying more, but you have more value and you could profit take if you choose to do so. Of course, if you profit take, you'd have to do that for something like dollars, or maybe you could do it for other real assets too. So therefore, I'm going to conclude this video. The bull market is still intact. The fundamentals for the reasons to own physical silver not only are still intact, but they are growing exponentially. Take care.